All right, thanks everyone for joining us today. We are here on the beautiful beaches of Bradenton Beach, Anna Maria Island, Florida, a place that I am so happy to call home. My name is Brie Bender. I'm with Innovate Real Estate, and I have a special guest here with me today. This is Brett McInley of Legendary Mortgage. He is one of our lending partners specifically for the island because he specializes or helps me specialize in investment loans. And so today, Brett, first off, tell us a little bit about you and your background and, why you're so into mortgages and helping people find a place to call home.
Yeah, absolutely. So I'm a loan originator and loan officer for Legendary Mortgage based out of Myrtle Beach, South Carolina. So we're a firm that has extensive familiarity and experience with both residential lending for single family homes, but I think most importantly to this conversation, all the work we do in the investment property space, specifically with DSCR loans.
Yes. Absolutely. And one of the reasons why, Brett and his team are so good is because they understand. Like, I can talk to them about what's going on with my clients. They can give me expert advice about what I need to do, what the next steps need to be are. So there's a few different types of lending that consumers need to look at when they're looking at buying property in a beautiful place like this, right? You've got investment property, people that are looking to just specifically buy something to make it a vacation rental or a long-term rental.
Yeah.
You've got somebody that's looking for a second home, so they want to be able to enjoy this beautiful piece of paradise, or they're looking for primary residence. So there's three different types of lending to consider. And the first type that we've talked about is the DSCR loan, which is the property has to strictly qualify based off of the amount of income that it brings in. But I'm really curious to know what you think about just the second piece of just investment property. If somebody's looking for it just as an investment property to use as a second home,
Yeah.
like what does that process look like for that borrower?
Yeah, certainly. So that is much more akin to your typical underwriting and approach to your primary residence. So multiple years worth of bank statements, W-2s or 1099s, tax returns. If there's business income, we're taking a look at those as well. And much more underwriter involvement, because unlike the DSCR loan where we're qualifying the asset for a second home of that magnitude, we're looking to qualify the individual and make sure that the financials are good, buy down the risk, and ensure that it's a loan that can be closed on and then ultimately serviced.
Okay, great. So where you're looking at for down payment wise for a consumer, how much down payment? Are there different programs? Can you do 10%, 20%? Like, what are the guidelines when it comes to if they're looking just for an investment property for themselves?
Yeah, certainly. Any number of programs, any number of guidelines, but a general rule of thumb will be anywhere 15 to 20% down for most buyers and borrowers. Some clients with very strong cash liquidity and very strong portfolios can go down as low as 10%.
Okay.
But obviously you would expect a much higher FICO score and some of the other metrics to be much more positive.
Right. Okay. And so is there a difference from a lending side of things, whether someone's buying it as a strict investment property, like a straight investment property, or as a second home?
There are a couple of differences. And one I'd highlight is if it's purely an investment property, the borrower has the ability to close that in an LLC and not in their own name. So that specifically for investment properties allows for a degree of anonymity, but also protects their other assets as well. If it's a primary residence or in some cases, a second home, it has to close in kind of natural person or in an individual's name.
Okay. And then correct me if I'm wrong, in a traditional investment property, can't you also include like some of the rental income that the property makes to help the property qualify and the buyer qualify?
You can. In certain
Okay.
circumstances with certain programs and certain lenders, you can include and calculate projected rental income to help offset what the borrower would have to bring to the table themselves.
Okay, great. And I also just read about this program, and I'm just throwing this at you because we didn't
Go
talk
for it.
about it
Go
yet.
for it.
But didn't FHA just roll out a program for veterans? And first of all, thank you for your service. So Brett is a Marine and will always be a Marine. But isn't there a program that they've rolled out that veterans can get maybe like a duplex or up to a quad where they live in one of the units
Mhm.
and then they can use the income from the other ones to qualify?
Yep, absolutely. So
Okay.
with VA guidelines, 1 to 4 units, sometimes there is the ability to have a small commercial space in there as well. But the general rule of thumb and what we tell folks is if it's a multi-unit property, the VA will underwrite to 1 to 4 units.
Okay, great. So that's something to be on the lookout for as well that not many people I don't think are really taking advantage of yet
Yeah.
is that new program that Fannie Mae, I believe it is, rolled out. And I'll correct myself if I'm wrong, but I believe that's a Fannie Mae product. So it's exciting. There's always new products coming out that we can educate consumers about. So as a borrower that's working with a real estate agent, whether it be on the sell side or the buy side, some important things that help you to be able to do your job is making sure that we are prepared. So we've got all of the financials together for that property. If it is a strict investment property or DSCR, we need to make sure we have the maybe last 2 years of rental income, projected rental income that's coming up, how much the expenses are for that property, what the insurance is, whether it be homeowners insurance and flood insurance as well, because that plays a big part in affordability for the property too. Taxes, so projected taxes, looking at how much the current taxes are, making sure if it's a homestead property, which means somebody lives there full time, versus being an investment property, what that's going to do to the cost of the taxes as well. And just having all of that information up front. It's really hard for a lender to get somebody pre-approved if they don't have all the details to do that pre-approval. And so as an agent, I like to make sure we're prepared. If you're working with a buyer's agent, making sure they have all of that for you is super important. And then if you have your property listed, making sure your listing agent has gathered all of that information ahead of time and is working with the lender like Brett that can even give prospective buyers some options to look at. That is huge. I know for me, looking at properties all day long here at the beach, it's really difficult for me to serve my client if we don't have all of that up front or trying to get it at the last minute. So, Brett, for you, if you could tell our consumers one important thing about investment loans, what do you feel like is the most important thing they need to think about when they're looking at starting their investment journey?
Yeah, absolutely. And first of all, you completely nailed the list of required items. So if the real estate thing doesn't work out for you, we got room on the team for lending, right? I would say some of the something you want to find out early in the process is what are the local tax laws on short and long-term rentals. And that again is a key detail that experienced local agents are going to be able to understand and guide the investor appropriately upfront,
Yeah.
so that you don't get emotionally attached with the property or down the road before you realize, based off how that deal is going to be structured, it's just not going to work based off local regulations or oversight. So that's one.
Right.
And then second is, again, just going back to the point of, are we going to qualify the asset or the individual? Because what we don't want to do is necessarily show everything to the underwriters if ultimately we're not going to go down that road.
Right.
And we're just going to use closing in an LLC or purely as an investment property.
Yeah. And that makes a big difference. Closing it in your personal name versus an LLC makes an insurance difference as well,
Absolutely.
which we didn't touch on. So that's important to know upfront, the best way that you're going to approach that financing side of things. Well, thank you, Brett, for joining us today. We truly appreciate
thank
your
you.
expertise and you being a great partner for us. And if you guys are interested in Anna Maria Island, Bradenton Beach, you should definitely come check it out. I mean, we've got one of the most beautiful beaches on the planet, in my opinion, and it looks like the
Yeah.
Caribbean out here and you're in Florida. So thanks for tuning in, everyone, and we'll see you soon.